Welcome back, investors, to the Investing with Our YouTube channel for another video. If you're new to the channel, I am a UK-based investor focusing mainly on US stocks, and I started the portfolio I will be showing you today in April 2021. I am fortunate enough to have gone past the golden milestone having a 100k portfolio, and I'll be showing you the ups and possibly more importantly the downs of my investing journey. This includes the buys, the sales, and the dividend income I receive. So if you're a returning viewer, smash that like button. If you're new to the channel, subscribe so you can follow my journey. Now, let's get into it. In today's video, we're going to be going over the second week of September, and what a week it's been. So let's have a quick look. So overall, up £3,458 for the week, which is a 2.8% gain. If you look at the end of last week, we were at £123,089. And this week we're ending at £126,547. I mean, that is just a crazy amount for it to go up. It seems like people are anticipating the rate cut and the market is going up off the back of that. Now, what's probably likely to happen is that the rate cut, which is due to be announced on the 17th, if it does happen, it's probably going to be a sell the news type of event. So once it happens, the market is probably going to drop as people are front running it. If that doesn't happen and the market continues to go up, we're going to have one of the best Septembers in history. Historically, September is a month of drawdowns, so usually the market goes down. But this might be an anomaly this year. Let's hope the market continues to go up. Now, I think I mentioned the week before that about a year or so ago, I made a concerted effort of moving away from dividend stocks, which most of my portfolio was based on, and moved into growth stocks because I just saw that the market was entering a bull run. And I'm so glad that I did. As you can see, in the last year, I'm up 27.5%. If we look at the S&P 500's performance during that time, it is up just over 17%. So I'm beating the market by 10%. Now, this is not going to always happen, but I'm really, really proud of my achievement of doing this. And my portfolio has really benefited off that. If you can see the max overall, we're up just under 35k. On Friday, I did go past the 35k mark, but it settled just below for an 82.4% gain. As you can see, a lot of those gains came in the last year as I transitioned away from a dividend portfolio, which I will go back into. So once my portfolio gets to, $500,000 or so, I will move back into dividends and collect the consistent income, which should replace my actual income. Now, I will go over the holdings in my portfolio a bit later, but I wanted to talk about the sales that I've made this year. And I want to quickly discuss the reasons why I would sell a stock. And here they are. So the main one for me is a change in thesis. So has the original reason you bought the stock no longer valid? Has management changed the direction or strategy in a way that no longer aligns with your expectations? Now, I'm a long-term investor. I don't really sell too often because I do buy stocks for the long term. But there was a particular stock that I bought last year where the fundamentals changed a lot, in my opinion. I ended up selling it. It was my biggest position overall at the time. I'm going to go into a little bit later. But I think that's the major reason why you would sell a stock. Because I believe that you should be buying a stock with the view to holding it long term. Because when you hold a stock long term, that's usually when you get the most appreciation. There are options for some quick flips, which I've done on one, where you see a stock go down for a bad earnings, for example, and the market has been irrational, and then you can buy that dip and then sell it when it starts to recover. But the main reason for me is this, a change in thesis. So what other parameters could change for the thesis to change? So have the fundamentals deteriorated? So are the company's earnings, revenues, or margins declined or declining? Are debt levels rising, which weakens the balance sheet? Or are there new competitors coming in and developed a better product? There are other things such as regulatory, technological, or geopolitical changes, which can affect companies' outlook. So those are things that could also be considered. But again, change in thesis. That's the main one, I would say. Second one is valuation. Is the stock now trading far above its intrinsic value? Is the price to earnings ratio too high now, or future price to earnings ratio too high? Because if that's the case and the company can't keep up with that, then the share price will naturally drop. So this is another time where you could consider that. This one is quite important. Better opportunities elsewhere. So I like to think that if you buy a stock and it's declining and continue to decline, that stock doesn't have to get your money back. You can then pass the baton onto a different stock to take it up. Now, one particular stock within my portfolio where this is happening is Rio Tinto. The company's just struggling. It's been struggling for about a year. And there might be a move where I sell that stock and try and get that loss that I'm going to incur back from another stock. The fourth one is portfolio management. Has the stock grown to an outsized portion of your portfolio? And now this is starting to happen with Google. So Google for me is 15% of my portfolio right now through growth. It was originally about 10% just because I thought Google was such a big buying opportunity. Now, if that gets to about 20%, I'm going to have to naturally trim, because as good a stock as Google is, if it starts to becoming 1/5 of my portfolio, I think it's too much to have in one stock. I prefer to be diversified. Even if a stock is amazing, there could be something that happens which is out of your control, such as the ones that we mentioned earlier, like regulatory change, geopolitical change, technological change. And then if it's such a big part of your portfolio, it's going to be hard to remaneuver. And the last one is behavioral and discipline reasons. Now, this falls into a bit of what we talked about earlier. So if a stock is going too far down, you shouldn't fall in love with it unreasonably, unless you have a good thesis for why it should recover. It's good just to part ways. And the opposite side is, if you've built up a big profit in a position that you're happy with, then sometimes it's okay just to lock in that profit and then sell. Now, with all this in mind, let's look at some of the sales that I've made this year. So the first one actually didn't happen this year, but it happened last year. And the reason I've included this is just to showcase one of the earlier things where you can buy a stock short term and then flip it. So I did this with CRM, which is otherwise known as Salesforce. And they had a earnings report where I think the market overreacted and the shares fell. And I decided to buy this with a view to flipping it, really. So I ended up buying 3 shares, which I later sold. So I think I bought this in about September, and I sold at the end of November, where the share price was $330. My holding was £782 for a £215 profit. And that equated to a 27.49% return. And here's a rationale: short-term play. And it's worked out really well because the current share price of Salesforce is now 242. So I sold pretty much at the top. So this was a very well-timed play. Now, the rest of the holdings that I've sold all happened this year. And I sold my entire holding in Shell, which equated to £1,548 worth. So I sold 61 shares for £25.9. This should be in pounds, but it's in dollars. And the current price is $26.37. So if I held it, I would have earned a little bit more. Now, the reason why I sold it was I saw a great opportunity to buy Meta, which has worked out really, really well, which has outperformed this additional gain that I would have had if I held on to Shell. So let's have a quick look at Meta. So as you can see, I bought my Meta shares for an average costing of $584, and now it's at $755. So I've made a huge return on that. So since that purchase, and one more because I sold a bit more of another stock to buy Meta, I'm up 26.79% for a £1,846 gain, which is far higher than what I would have if I had held Shell. Now, on the same day, I sold ExxonMobil, my entire holding in that actually as well. So I sold £4,237 worth, 52 shares, for a profit of £566 for a 13.36% gain. So the price I sold was 107. The current price of Shell now is 112. So again, it's gone up as you would expect in a bull market, but I've made more, as I've just shown you, from the buy in Meta. Now, my next 2 sales happened on the 14th of May, where I sold my entire holding in BHP. Now, this is where my first loss comes in, and this is where, as earlier I mentioned, the loss on the stock does not have to be gotten back by the stock that you hold. And this company is very similar to Rio Tinto. It's in the mining sector. This was originally bought when I was a dividend investor, and it wasn't showing its worth within my portfolio. So I ended up selling it for a loss. We don't want to see losses, but it is what it is. And I ended up selling for 2,561, 134 shares for £19.10, and it's currently trading at £19.92. So the reasons for both of these sales were to buy HIMS. HIMS is a company that I'm bullish on. Let's have a quick look at that. Currently, I'm down on this position, but this is a company that's going to recover and it's going to do well. And I'm happy to be a holder of it. I also ended up selling my position in AbbVie for a profit this time. So I sold just under 10 shares for £1,385 for an 18.48% gain. I sold at 186, but currently the share prices are 218. So at the moment, it's not paying off as of today, but I think in the long run, HIMS will do well and I'll make a good gain out of that. Now, I mentioned earlier, the main reasons why I would sell a stock is when a thesis has changed. And that was really evident in one holding of mine, which was MicroStrategy. At one point, I held about £20,000 worth of this stock. It was my biggest holding. The main reason I held it was because I'm very bullish Bitcoin, and MSTR is a big holder of Bitcoin, and I wanted a tax-free way of holding it within my portfolio, as I think Bitcoin's going to go up. It's going to continue to go up, and this was a good way. Now, what MicroStrategy essentially does is buys Bitcoin and uses its appreciation to then grow the company's value. And the main way it was buying up Bitcoin, it was issuing new shares, which were then diluting existing shareholders to then use the proceeds to buy Bitcoin, which was fine. But it was doing it too much. And you can see from this graph, the orange dots are when MicroStrategy bought Bitcoin. And as you can see, there was some gaps in between when it was buying and when Bitcoin started going up, as it has been. That's when the share price really, really shot up. Like, as you can see, up until about here. So the growth of MicroStrategy has been really solid. If we look at the share price here, it has gone up over 2,000% if you hold it from early. Even in the last year, it's done well. But recently, as you can see, coin price has been going up, but MicroStrategy shares have been going down. As you can see right there, look at all the Bitcoin buys. Some of them have been huge. And now it should be going up, but it's actually going down, which I didn't like as a shareholder, this constant dilution. So I ended up selling all my holding in bits and pieces to buy other things. So let's have a look at that. So as I mentioned earlier, I bought more of HIMS. I sold £1,500 worth of MSTR for a £32 profit. Now, as you can see, I sold it at $386 and now it's at $331. So I've done well on that already. And I'm happy that I'm out of it. Long term, I think Bitcoin will do well and this company will probably do well, but I don't really want to wait that long, to be honest. My next two were to buy Oscar Health, which is another company that I'm very bullish on. And I ended up selling more MicroStrategy shares, £4,000 worth, this time for a £231 gain. I sold for even more actually, for $398. Current share price again is $331. So I've done well off that one. The other holding was I trimmed a bit of Apple because I thought Apple was a little bit underperforming out of the Mag 7 and within my portfolio generally. It's been a recent surge since then, but I sold at $211, £1,000 worth for a £59 gain to buy Oscar again. So let's have a quick look at Oscar. So my average cost for Oscar was $16.59 and it's currently trading at $19.33. So I'm up 16.7%. So this company has done all right in terms of my sell. And long term, I think it's going to go up higher as well. Now, my next batch of sales happened on the 28th of July, where I sold some Tesla. So I sold 3.5 shares essentially for a £260 gain. And both of these sales were to buy a stock that I'm really bullish on actually, which is Robinhood. So I ended up selling that and the rest of my AbbVie holding for a £634 gain. So I sold AbbVie shares for $190 each, for a 19.6% gain. Also made 31% on the Tesla shares just to free up the cash to buy Robinhood. Now, if you look at my holding in Robinhood, I am up 6% for a £487 gain. And now that it's been included in the S&P 500, I think this company is going to go up quite a lot. Now, my final sale was the remainder of my MSTR holding, which I sold 14.7 shares. And I've done really well on that one. I sold that at pretty much the top at $407 each. Current share price at $331 for a 9% gain. And the main reason was to buy some more hood and to buy Nvidia and Broadcom, which both gave really good guidance that the semiconductor market was going to continue to do well, and it has done. Both of these companies, Nvidia and Broadcom, have done really well recently. So yeah, so those are my total sales. So overall, that's a £2,200 profit, with my only loss being £527 in BHP. So those are my sales for this year. This is a quick overview of how my stocks did for the week. As you can see, a lot of green. As you can imagine, with a week where you're up 3.5k, most of the positions are going to be in the green. So let's have a quick look at the ones that I did really well. So if you like the content so far, please give this video a quick like so other people can see it and other people can be inspired to begin or continue investing. So I'm going to give you 5 seconds. Give it a quick like and subscribe if you want to follow the journey. So thank you very much for that. In at number 5 at 6.58% gain was KLA. This has done really well recently, as have a lot of the semiconductors, including ASML, which is down only 4%. So if we look at it for a week, it's up 4.39%, gone past the $800 mark. This is a company that has been struggling a little bit for a while. As mentioned, I don't know why when the rest of the semiconductor industry is doing well, but this is now recovering and is now down only 4%. So this is really, really good. In at number 4, the theme of semiconductors continues with Broadcom absolutely smashing it this year, up almost 7.5% for the week. If we look at the 1-year performance, we are at almost 115%. So I've got a £2,640 gain on that position. In at number 3 at 12.69% up for the week, it is Tesla, getting close to that $400 mark. The market is expecting 500,000 vehicle sales in the upcoming quarter, and this is one of the reasons why the share price is going up. And also the rate cuts, if it does happen, will help people get out loans and buy things like cars. So this is one of the reasons why the market has gone up. In at number 2, HIMS, 13.5%. One of the main reasons is that they've recently released a testosterone product and the market is reacting well off that. So it's great to see a company that had a lot of conviction on, made a lot of sales to purchase, and now doing quite well. And the biggest performer for the week at 13.85% is Robinhood. As mentioned earlier, after the S&P inclusion, and also they had an investor event where they launched a few new products, which the market really liked. So again, a company I'm really bullish on. I think next week after the rate cuts, if the market does go down, I think I might add some additional shares in this stock. So those were the top performers. Let's have a quick look at the overall positions within my portfolio. Again, Google had a strong week where I'm now up over 5k. So this is the first company that's gone over 5k in terms of gains in my portfolio. So I'm really, really happy about that. Up 38%. It's a company that I had a lot of conviction on. Bought it at an average cost of $162 and now it's at $240 and going from strength to strength. I think the PE is around still under 25. So again, it's seen quote unquote cheap. So this is a company that if you don't have a position on, it is one that is worth adding to. Imperial Brands at 9.6k, up 77% for a 4.2k gain. MasterCard up 10% for £823 gain. Visa up 7.73% for a £641 gain. Meta up 26.79% and Robinhood up 6% for a £487 gain. Microsoft, I'm up 27% on that for a £1,447 gain. HIMS, the first loss that you're seeing in the portfolio so far in terms of my bigger holdings, so down just under 6%. But again, I think this one will definitely recover, and the trajectory, as you can see from the last week, is a good one. Carnival, my best performer in terms of overall percentage, so up 3.5k for a £6,457 gain. Tesla with a fantastic week, up 77% for just under 2.8k gain. Nvidia up just under 60% for just under a 2.2k gain. Oscar up 16.72% for a £834 gain. Broadcom competing with Nvidia in terms of gain so far this year, absolutely smashing it. So up 83%. Amazon up 17%. Elgin the second stock that's down, but it's only down marginally for a £90 loss. Centrica up 44% for a £940 gain. Rio Tinto, as we mentioned earlier, as we do every week, down for a 13% loss. Costco up 18% for a £368 gain. Apple up 17% for a £269 gain. KLA up just under 16% for a £90 gain. And ASML recovering. And it's going to go in the green soon, guys. It is. And it's down just under 4%. So that's it. That's my overall portfolio and my holdings. As you can see, the portfolio is doing really, really well. I'm really happy, and long may it continue.